investors are digesting first half year earnings as more numbers trickle in this week. The latest is Dangote Cement recording a profit after tax that rose 6.3% year on year to 189 billion naira in the first half. Patrick, Ejumedia, head of research at Sterling Asset Management, is in the studio to give us some perspective on the markets. Patrick, it's a pleasure to have you on the program.
Hi, it's good to see
So,
you.
a good place to start may be your perspective on the earnings we've seen so far, starting with the Dangote Cement number. We're clearly seeing the impact of inflation and the currency weakness, but the company still managed to report a profit that was up about 6%.
Yeah, so far, surprisingly, like I've said, most of these companies are doing well in spite of the challenges that the economy is currently facing. High inflation, exchange rate crisis, and all that. Any report that has come out so far has shown that these companies are doing well. Dangote has shown profit. Geregu also came out and showed the profits, and likewise Transpower too came out and they showed over 233% profit from their last year profit. So far, the market is doing well in spite of the challenges that the economy is facing.
What do you make of the Dangote Cement number in particular? And how does that translate to your rating of the stock right now?
Yeah, basically, because of the construction companies, the construction that is currently going on in the country now, so there's high demand for cement. So it appears that, yes, they are doing well as long as the construction is taking place and as long as we are a developing economy and a lot of construction will still continue to take place. So it's possible for one to continue to rate them as high as one to want to, have
so
a feel.
You will recommend to buy Dangote Cement at the current levels?
Yeah, but it's not something we first do a fundamental analysis first to be able to come out with that. But at the surface like this, it's not just good to just agree to say, yes, go and begin to purchase their stock.
What about Guinness? Because it's not all great. We are seeing the pressure with that loss that they reported in the numbers up to June 2024. Is that a telling sign for what we can expect from most manufacturers?
Yeah, obviously, I don't think it's surprising. Everybody should know that the exchange rate, most of their input come from, abroad and they import. And since the exchange rate is depreciating, although the government is doing a lot to ensure that they stabilize it, but as long as the exchange rate crisis is still there, there's high borrowing costs, there's high inflation. I don't think it's surprising. What they brought out is not surprising.
Right. Yeah. Let's move now to some of the others that are doing pretty well. We've seen Transcore Power, Geregu Power also report. Yeah. So the power companies clearly seem to be in a good place, especially generating companies. Yeah. Will that be the sector that you would be recommending for more allocation of funds in the equities market right now?
Yeah, basically, if you look at the nature of those companies, because they are a generating company, it's possible for them to be making the profit because what you generate is what you sell. But in the process of moving it to the middle and then the discos, some of those energies will be lost, and again, so they might not be able to. The discos may not be able to make so much profit compared to the generating company, the Transpower and the Geregu company that came out. So, like you said, yes, it might be a way to say yes, it's difficult for them. When they came out too into the market, they also made some huge, significant impact in the market when Transpower was listed in the market sometime this year, and the reason is because they are a generating company. If we have the discos company too listed, you might begin to see the true impact of the energy sector or the power sector companies in the market.
I think it's important to also point out that Transcore Group's revenues were up 114%. So clearly in many very good businesses that they're invested in there. Yeah. But moving on to the banks now, and we continue to see the big focus on capital raising. We've seen the likes of GT Bank and Access already come to the market, and I think come next week, FCMB will be making a speech to investors. So what do you make of the offers in general? Are you one of those that thinks that the banks are an easy buy, these public offerings and rights issues?
Well, it's a yes and no. A yes because at this moment, because they are trying to raise capital, so you might see that their prices may be a bit down compared to what it should have been. So we see people buying. But a no because, we all know about the 50% FX tax that the government has levied on them. And of course, we know that a lot of them now do FX trading as one of the significant part of their business, which ideally is not supposed to be. So if that continues, then it will continue to drag that sector down. And if you look at the market year to date, you see them not performing too well. So those might have some factors. So that's why I said the yes or no. Yes, because at this time, by the time the bank eventually comes out and is big, it will be cheaper. You would have bought a big bank at a cheap price for whatever they are selling now. But they know because of some of these issues surrounding it.
The hawkish sentiment from the MPC earlier this week, I think is also telling, because it suggests that the easy times are not around the corner for most companies, especially when it comes to raising funds to do their business. What do you make of that decision of the MPC to raise rates, and what, in your view, does that mean for the economy?
Yes, it's also, at that point, for me, I think the only option the government had was to raise the rate. If you look at the exchange rates, like we all know, one of the key functions of the CBN is to curb inflation and stabilize the Naira. Now, if you look at the exchange rate, what happened around before the last time MPC meeting and this one, the Naira has begun to depreciate. At some point, it got to 1,620 before the CBN started selling dollars to the BDCs. And that was not led to having that meeting. So what the best option that they could have done was to raise the rate to see how they can use that to discourage capital outflow and encourage people to bring inflow into the system, so that FX can come up. But again, they may not want to increase the TB rate, because sometimes you see that there's a link between all the rates, the MPRU and the TB rate. Because if you check the last debt profile, you will see that TB rates went up by about 60%. So government may not want to increase it too further so that debt profile will also be going up. But I think that is the option for now. But again, you also know that we're in summer period, so people will be demanding FX. So if government does not take those steps, we might see the exchange rate going down, depreciating further. But usually at this time, seasonal factors begin to make the exchange rate to depreciate.
Looking into next week, one major unknown is how this planned protest is likely to play out, and of course the implications for the economy, which already is struggling. What do you make of the scenarios that we could see next week?
Well, I know everybody there and there have complained about the hardship, which is eating everybody. But I feel that to come out with that is important for there to be what exactly do we actually want as a people, so that we can put that on the table. I've not seen any document that have shown that, these are what exactly we want, apart from, reduce oil price, bring inflation down. All those things are things that has to do with some level of institutions. So we need to see how we can correct the institutions. It's only when that is corrected that we can then be talking about those things naturally coming down.
All right, let's leave it there. Thank you so much for your perspective today. Patrick, Ejumedia is the head of research at Sterling Asset Management and Trustees.